You've mentioned now a couple different points on looking beyond the capital and thinking about who's on your cap table, the impact they can have, why you want them on your cap table, and ultimately that kind of unfair advantage. And I think that's kind of a key takeaway for founders here to understand that there's just so much more than money at stake when it comes to raising capital. And when VCs see you coming only for money and nothing else, it's usually a deterrent. But when you have a dialogue around this type of strategic value add, the VCs feel like they're going to have more impact, higher potential of return on their investment when they feel they might have a little bit of control. Which
Totally.
leads me to my next question. When you were out in market and raising capital, it sounds like you were leveraging your network, seeing where you can kind of get into. Were you dealing with competing term sheets? Were you kind of seeing multiple offers and kind of having to pick and choose who was best for you? Kind of like once you got out there and people were buying what you were selling from a capital raising standpoint, what was your experience when it came to dealing with term sheets and kind of choosing your partners?
Totally. I think we had a very short list of folks that we really wanted involved. And our strategy to get that done, and I'm a firm believer, I mean, granted, we haven't been fundraising in a little while, so this market is potentially a little bit different. I've been hearing that fundraisers are just generally taking longer, and that makes it so much sense. But certainly in both the rounds that we've done, and guess we fused it in one round, so the round that we have done, I think the tight process worked for us. And the whole goal of a tight process is to get as many term sheets as possible in a short period of time so that you have you are in control of the process versus having a term sheet that is kind of going to expire or whatever it is. And, just like waiting, just like you have less leverage. And I think the control is taken out of the founder's hands in that situation. So we certainly had multiple term sheets that were given to us at the same time, and we had to make the decision. I think going back to kind of what you said and what I was saying as well, the decision was easy for us, though, because we were very intentional about, we wanted the specific investor to be involved because of the value they provided, which is X, right? It wasn't just the capital, it wasn't just the name. It was, we want to access this type of customer, and they have a ton of portfolio companies that are really good in this space, and they can connect us with previous operators that can give us an unfair advantage logistically to assess this. We want to hack supply this way, and these investors are dealers themselves, and so they give us an unfair advantage hacking supply. I think being intentional about the chess move that happens after the capital is in, I think makes the decision-making process a lot easier. The other thing too is I don't think people talk about how stressful that is, where the pendulum shifts from, wow, how are we going to get anyone to invest in this business, to these are all incredible people. They're calling my phone trying to invest in this business. I don't want to say no, that feels crazy. How do I figure out a right path? And we were just really lucky to get the right people around the table. And a lot of people got the ownership requirements. A lot of people maybe didn't get the ownership requirements they needed in the first round, but then they came back in the second round, and ultimately it kind of made its way out. So yeah, I think the goal is just being very intentional about what happens outside of the capital and making sure you're working with partners that understand that. And I'm super lucky, and all the partners that we have on the investment side are so founder friendly, and they're just in our corner, and they understood the entire process. They weren't trying to land grab and take as much ownership as they had. A lot of the funds that we were working with were realizing that it made a lot of sense for us to hold off a slug of the round to be given to strategic investors because it gave us a better chance of succeeding. So they eased up on their ownership targets to allow it to happen. And yeah, so I had a very pleasant experience with that, but I recognize that maybe that's not always the way that it goes.